Okay, hi everybody and welcome to the presentation. My name is Clay Malcolm here at Advance IRA alongside Tom Schneider from Rusik.com, and we're gonna be your presenters for today. So again, my name is Clay Malcolm, and I'm happy to be the host of the presentation today. We're going to be talking about something that's really interesting in terms of your ability as an IRA investor or even outside your IRA to expand your geography when you're thinking about real estate investing. And I really want to thank Tom Schneider from Rusik.com for joining me and sharing some expertise about how real estate investors can really utilize the technology that's out there to do a lot of the work that they used to have to do with, all kinds of other tools, not to mention, live and that kind of thing, especially in this era of, the coronavirus. So everybody being a little bit more careful about contact. So it's really a timely presentation, and I appreciate him bringing his expertise. I'm going to start it.
Yeah, thanks for having me on, Clay. Happy to be here.
Absolutely. It's good to see you again. Tom and I have done a few events together. I'm going to start with a little bit of the IRA part of it. How do IRAs invest in real estate? What are the kind of parameters to think about? And then I'll let Tom kind of tell you his background. But he and I are both real estate investors. Tom on a little bit bigger scale than I am. So we do have some experience doing exactly what we're going to be talking about today. And so we're one of you as a fellow investor. So I'm going to talk a little bit about the IRA part, then I'm going to turn it over to Tom, and he'll take it from there and talk about the technology and analysis and things like that. And then we'll definitely have Q&A at the end. And I'll just remind you that if you have questions anytime during the presentation, go ahead and type them into the questions box. We're going to handle those all at the end. But I will definitely keep track of all of those. So please feel free. Anytime a question hits you, just go ahead and type it in, and if we haven't covered it in the presentation, we'll definitely cover it at the end. All right, so let's talk a little bit of IRA here. This is obviously I don't need my picture because I have the video going, but I've been in the business for almost 10 years, and I'm certainly happy to talk to anybody on a one-on-one level about IRA real estate investing. So please do feel free to write down my contact information, send me an email, give me a call. Our website also has a lot of educational information as well if IRA real estate investing is new to you. But as I mentioned before, I'm a real estate investor both inside and outside my IRA. And so I really do, I'm looking forward to the presentation because I know I'm going to learn some interesting things today. And I'm also happy to talk to you about your strategy or my experience. So please feel free to reach out. I do start all the presentations with a bit of a disclaimer. So all the information in the presentation today is for education purposes only. At Advance, we do not give tax, legal, or investment advice. We don't advocate any particular asset strategy or asset vendor. And we really encourage you to talk to your financial team when you're considering any kind of investment for your IRA. It's really one of the great benefits of self-directed IRA investing that you can bring your own team. So we certainly encourage you to talk to your CPA, your attorney, anybody that is part of the equation for you when you're evaluating a potential investment. Disclaimers are sometimes a bit of a throwaway, but in this particular case, one of the things that it does indicate and talk about is the fact that Advance IRA, we are a very neutral part of the equation. So we don't give any tax, legal, or investment advice. Our role is really to document the activity of the account so that you get to keep the tax benefits that are associated with that account type, the traditional or Roth or whatever it is that you're in. So you do provide the motive force and whatever analysis is needed for the investments. That's really a part of the role of the IRA holder when it comes to self-directed IRA investing. Now, that doesn't mean that we're totally passive. We are your collaborator in terms of customer service and giving you rules that the IRS has, establishing appropriate paperwork. And we really want to make it a one-on-one relationship. So we are collaborating with you to execute the strategies that you want. And part of the reason that we do that, or part of the way that we do that, is by making sure that we have experts on staff. So we have long tenured employees. We do lots of internal education. One of the things we also offer is that your cash position with Advanta is FDIC insured. And I would say that probably the most compelling advantage of Advanta, from my perspective, is the personal service. So you do get a personal account manager. So you have a person's email, their extension. and you know who to go to when you have a question. So you don't have to feel like you're out there and have to search around, or you've talked to 15 people. It's not like that for us. So we really want to make sure that you know where to go to get information so that you can perform the activity on the account that works best for you. And as you can see there, we're a bit of a medium-sized company in the space. So we're about 1.3 billion in assets under management. So we've done enough transactions to know about all kinds of transactions and pretty much have run into everything, but we're not so big that you can't get a person on the phone. Okay, let's talk about the mechanics of the accounts and investing. So one of the things that some people sometimes are misunderstand about the process is that they think that self-directed is an account type or a legal distinction. And it's actually not. The account types are exactly the same ones as you're already used to. So traditional and Roth, employer plans like a SEP IRA or a simple IRA. We also work with solo 401ks. We do education savings plans, savings accounts, as well as HSAs. A lot of people don't know that their health savings account can also invest in alternative assets like we're going to talk about today. It is an individual custodial account and operates in a very similar manner to a traditional or an IRA or a Roth IRA. It actually has both of their tax benefits as well. So as a tax tool, it's really a powerful one. But it can invest in all the strategies that we're talking about today too. So remember that when we're talking about self-directed, generally speaking, in the lexicon of investing, what we're talking about is the fact that you're going to be at an administrator or a custodian that can handle alternative assets. That's usually what somebody is referring to when they say self-directed. So at Advanced IRA, we handle all kinds of assets. And that includes real estate. It includes real estate-based investments like a real estate fund, certainly mortgages and notes, whether those notes are partial or full or tied to real estate or not. So all kinds of private lending, private equity investments of all kinds. So whether that's a startup company, pre-IPO, a company that's recapitalizing, or more of a fund structure like we've talked about before. We certainly do precious metals. Again, almost anything, well, not again, but one of the things I want to stress is that almost anything that you know, any way that you know to make money outside of your IRA, you can usually make money at it inside your IRA. So you bring that strategy. It takes a little while to set it up, make sure that you have the appropriate custodian and you have some education behind you when you're setting that up. But lots of those expertises that you may have or strategies that you have that are working outside your IRA can be used inside your IRA. So do ask and try to tailor that success and graft it into a tax advantaged account, because then you're adding the tax advantages. So again, when somebody's talking about a self-directed IRA or self-directed IRA investing, usually what they're talking about is taking one of those account types on the previous screen and matching it or using these investment types to make money inside that IRA. So you're taking a tax tool in the account and an alternative or private investment as a money-making tool, and you're putting them together. Now, there are some rules. IRAs can invest in collectibles and life insurance, and the IRA holder and some of their family members they have some restrictions in terms of the way that they interact with the IRA cash and assets. So there are some rules, so it is important to have a custodian who will make those available to you, and you can get on the phone and ask questions about that kind of thing. So there are things to consider. It's a process that occurs over time, unfolds over time. So please do feel free to keep asking questions and keep expanding your education. As I mentioned earlier, one of the things that I think is really great about this type of investing is that you find the deal. Like, I get to choose what it is that my IRA is going to invest in. And Tom today is going to talk about a way to find deals that's kind of new to me and maybe new to you as well. So it's just be another tool in the toolbox. But the great thing is that you get to use your own network, use your own financial team in service of your tax advantaged account. Now, let's transition into real estate specific. So we're talking about an IRA that is going to purchase real estate, in this case, a physical property. There are some ownership structures that are available to you. One is your IRA can purchase the property outright, so 100% ownership. If your IRA does not have the full purchase price, it certainly can partner with other investors, and that could be either as tenants in common on the title work, or in some cases, and this is very akin to kind of those private funds we were talking about a moment ago, investors will all invest in an LLC to a different percentage, whatever it is that's available to them, and then that LLC is the entity that will go out and buy the property. So that's another partnership structure that is available to your IRA. You can also obtain a loan. So if your IRA does not have the full purchase price, it actually can take out debt to extend its buying power. It's really a remarkable thing that the IRS lets us do this. So it's one of the only ways that the IRS would let you, your IRA, make money on money that you actually didn't have to contribute to the account, right? You borrowed it from somebody else. So it's a really interesting opportunity, and if you're comfortable with it, certainly it's a strategy to learn more about, because it does extend your buying power from an IRA's perspective and the amount of cash that you have to have in order to secure a property. So you do have some ownership structure possibilities there. A lot of people ask me about managing the property, so it is a good idea to get a little bit of a rough model of how that works. So all of the expenditures for the property, for purchase, for maintenance, for insurance, taxes, those come from the IRA, and all of the returns come back to the IRA, right? So even though there is money leaving and returning to the IRA, none of that is a distribution. It's actually the functioning of the investment. Now, you can have a property manager. Sometimes that really helps with cash management. So the IRA enters into an agreement with a property manager. They receive the rent. They can take out their fee. They can actually hold some IRA cash and pay bills with it. So there are some cash management decisions that you make along the way as an IRA holder when it comes to how you're going to manage the property. I mentioned earlier that the account holder and some family members have some restrictions in terms of their participation with the IRA's assets and cash. Well, one of them is about repairs and maintenance. So sweat equity, quote unquote, is essentially prohibited by the IRS for IRA-owned assets. So you do have to have non-disqualified persons work on the property, and a non-disqualified entity has to be the manager that you hire for the property. And if you have questions about the specifics of that, obviously I'm happy to answer those. But the great part, of course, the part we're all thinking about is the cash flow coming in. So as I mentioned before, because it is the IRA that owns the property, it's actually the IRA that receives the rent and cash proceeds from sale. So this is actually the way that your IRA is making money, instead of perhaps stock dividends or the stock price going up. It's the real estate producing rental returns or proceeds from sale. And you, as the IRA holder, are the one that is negotiating and those terms. So you're actually the strategy maker for all of those things, including the tenants and the lease terms and things like that. Just to cover a couple of common misunderstandings real fast, and I'm winding down here, so I'm going to bring Tom on here in a moment. Remember that it is an IRA investment. It's not a distribution. It's actually not the IRS that when they give you the ability to take a distribution to purchase your first home to live in. That's not what we're talking about here. What we're talking about is an IRA investment, and instead of it being a stock, it's a piece of real estate. Your IRA is its own legal and financial entity, so it has its own name, has its own bank account, it even has its own tax ID number. And so remember that when your IRA is going to buy a property, it needs to be in the name of the IRA. Now, that changes a little bit if you do the LLC partnership structure or have an LLC involved, but understand that your IRA is a separate legal entity from you personally. So when you go on roofstock.com, for instance, and you're going to secure a property, the name of the buyer is actually the IRA, not your personal name. I talked about the fact that IRAs are a closed financial system, so the IRA pays for purchase, maintenance, and insurance and taxes, and it receives all the proceeds. Remember that the IRA holder can provide the strategy. What's the current rent going to be? Who am I going to rent to? All those things. I think sometimes people think of IRAs as being very static and that they don't have very much ability to adapt to the marketplace. Well, when it comes to real estate investing through your IRA, that's actually not the case. LLCs are allowed as a subset of your IRA, but they are not required. I do get that misconception sometimes. So you can have an LLC as part of your IRA investment strategy, but you don't have to. It's another strategy decision that the account holder makes. And IRA debt, when your IRA, because it is a separate financial entity from you personally, when it takes out debt, it is not part of your personal financial world. It's actually a separate financial entity. So the IRA debt really doesn't count against your personal finances, nor do any of the other activities that are occurring inside the account. So hopefully I covered a few of the things that you may or may not have been clear on. Again, when it comes to questions and strategies and things like that, please do feel free to reach out to us. We're happy to talk to you and reach out to me personally. I'm happy to talk to you about whatever you have in mind. And it is much easier than most people think. All you really have to do is set up an account with Advanta. It takes about a day. Then you move some money into that account. People typically do that with a rollover, transfer, and or contribution, some combination of those things. Often it's an old 401k at a company where you don't work anymore, old 403b, something like that. So you just move that money. Those movements of cash are not taxed and they're not penalized. You're just moving it from one custodial entity to another. And then it's ready to invest. So you go out and you find your investment, you work with your team, and you choose an investment, negotiate the deal, and then the purchase is made. So it really is a relatively linear and logical process, really just about positioning the money with the right custodian that handles the asset class that you want to be in. And I'll remind you again, if you're having questions either in my presentation or throughout Tom's, go ahead and type them into the questions box, and we're happy to answer those at the end of the presentation. And at this point, I'm going to actually turn the controls over to Tom. I think we're going to wrangle this here. And so again, everybody, please welcome Tom Schneider. He's the Director of Investor Education from roofstock.com. Tom, welcome.
Hey guys, thanks again, Clay, for having me on. Love talking about real estate investing. So a quick, before we get going, on my presentation, a little background on myself. Over 10 years, 15 years of working in the space as either a technologist or within operations, as well as personally investing in the space. So building a personal portfolio for myself. I was previously, before working at Roofstock, I was the senior director of product at Waypoint, one of the single family REITs. It's now part of Invitation Homes. We're building out all the software for them to evaluate homes and manage them and lease and all of that good stuff, and also a California broker. Awesome. So today's, what I'm going to talk about is first high level about Roofstock as a company, what we do, where we came from, values, that kind of good stuff. And then I'm going to talk very briefly just on remote real estate in general and why it's such a good addition into your investment portfolio, specifically remotely versus locally. And then the real meat of it is going to be walking through a demo on the Roofstock platform, where I'm going to go onto the Roofstock website and show you guys how to use some of the filters, evaluate the properties, and that good stuff. And then we'll jump into Q&A. Make sense? All right. So Roofstock is the leading marketplace for investing in single family homes. We use technology to transform the way that rental properties are bought and sold, and our goal is to make investing stock market simple. We've done a lot of work. We've been in business for about 4.5 years, and we've done over $2 billion worth of transactions. We have an industry leading Roofstock guarantee, where you can buy a property on Roofstock. If you're not happy within 30 days, Roofstock will basically take it back from you. We have a track record of very successful investors. So for property managers that they send us the data back from some of our customers, we've seen over a 25% return, and that being split up between rental growth and operation, just the cash flow, as well as home price appreciation. Roofstock has a pretty wide footprint on where we do business. We do the majority of our business down in the Southeast, so the Georgia, Florida, Carolinas, as well as the Midwest. So Indiana, Ohio, Pennsylvania is really where the bulk of ours. But we'll go wherever we see the demand, wherever the supply and the demand match up. Roofstock is more than just a marketplace for buyers. It's a whole ecosystem. So we have learning resources, which I'm going to talk about in a second, related to Roofstock Academy and our Roof Talks. We have support for buyers with account executives who are experts on using the marketplace. We also have local market experts on the ground. Another excellent feature within Roofstock is this bring your own property. So while we list properties on Roofstock for sale, if you identify a property outside of Roofstock, you can actually buy it through Roofstock if it's in one of our supported markets through our bring your own property program. And the reason that's pretty valuable is to take advantage of the transaction concierge service, as well as some of the guarantees that we had and the post-ownership support. We have transaction coordination services to make a nice smooth transaction, as well as post-ownership support with our customer success team and seller support. So it's a marketplace. There's two sides of it. So we have a big part of the business dedicated to sellers and helping them make the most of their properties that they are looking to dispose of. So continuing on, Roofstock Academy. So this is a program that's near and dear to my heart. So this is our flagship paid program. And what you get with Roofstock Academy is a year of one-on-one and group coaching, lifetime access to over 50 hours of on-demand lectures and growing, starting from just getting started to more advanced concepts and scaling and building your portfolio. You also get access to our Sfr Playbook. So this is a collection of tools and templates, interview templates for identifying a property manager and vetting them, templates. We have this model, several Excel models from thinking about asset management to building a portfolio, working backwards from if you want to build a cash flow engine of like $100,000, what does that look like year by year, down to individual property analysis templates. And these are all the similar tools that I'd used before when working at one of the bigger single family REITs and the way that we did it. So taking Wall Street to Main Street. Other benefits we have with Roofstock Academy is a $2,500 worth of marketplace credits. And that's pretty incredible considering the program with the discount code I'm going to give you today is $1,150. So it's you're getting $2,500 back in credits. Is a pretty big boon. You're basically making money enrolling in the program, as well as a lifetime satisfaction full refund guarantee. And the discount code is education if you go to roofstockacademy.com to see that. We also have a podcast. So this is some of the other coaches within Rusik Academy. We put this up that is specific to remote real estate investing. There are a lot of great podcasts and content out there. But what I would say about this podcast is it's specific to remote real estate investing, the unique risks and opportunities and all of that good stuff. So, all right, continuing on. So a few notes on remote real estate investing. So I'd say the big reasons why to invest remotely versus in your backyard is one, market diversification. For a lot of people, one of the largest investments they have and ownerships they have is in the house that they own. So a key tenet of successful investing is diversification. So not putting all your eggs in one basket. The other is it's a way to get more deals to evaluate within. If you're just limiting yourself to within your own specific geography that you're in, there's only so many properties that come up. But when you remove those barriers, there is an ocean of real estate investment opportunity. The last one I'll point on, there's more than this, but the last one I'll point on is access to different price points. So $150,000 is not created equally. I am living in Northern California, and living here, that's like a bathroom remodel, but it's incredible what you can get, with other parts of the country, with that type of money and the way that you can work it versus limiting yourself to investing it just in your own backyard. And how is it possible? So with Roofstock, a couple of different elements I'm going to touch on. So one of them is the Roofstock tools, which we'll get into more within the demo on the website. So certification is a process that Roofstock does on all the listings that gets listed on the website. Certification is where Roofstock they'll do an inspection on the house. They'll look at the payment history. They'll look at the lease. They'll look at the preliminary title, and they'll evaluate if it's a good property. Roofstock doesn't just take listings and then throw them up. We go through this vetting process because at the end of the day, our name is kind of on the line with people who are buying these properties. So we go through this certification process to verify that it's a good investment. If it is, we'll list it on the site, and if it's not, we'll work with the seller on other ways to dispose of it. Just maybe Roofstock's not the best option for them. So through that certification process, we are filling in information in the Diligence Vault. And this is where we have a copy of the inspection. This is where we have a copy of a redacted payment history, all of those key documents that you would want to see when evaluating your real estate. We're going to give that to you upfront for free using these best practices that these institutions are doing when they're evaluating investment properties. And the neighborhood. So Roofstock is a technology company at its heart. So a neighborhood score is a tool that our data science team had created to evaluate properties at a very micro level. So it's looking at the economic outlook, it's looking at the crime, it's looking at the school. All of these different variables are coming in to make this score of what the neighborhood score is. And I think it's an awesome way, in a way that I'll put a barrier on the properties that I want to buy, and I'll use that in my investment thesis, the neighborhood score. The second aspect is the Roofstock ecosystem. So one thing I like about Roofstock is if you have your own, and when I say ecosystem, I talk about that as all the different people involved in investing in real estate. So there's property managers, there's lenders, there's insurance brokers. So Roofstock sees itself as the river guide, as we have all these preferred vetted vendors that we like, but you're welcome to use your own vendors if you have them. But if you want more of a turnkey solution, you can just use the existing Roofstock ecosystem. So we have these existing vetted partners that can help you basically get started right away. And the last piece is Roofstock support. So we've worn down this path where over thousands of investors have realized their dream of becoming a real estate investor, and we're here to support you. So the post-ownership Roofstock support and some of the guarantees that we have. All right, so I'm going to go ahead and jump into the Roofstock demo now, where we're going to go take a look on the Roofstock website. All right, so we're going to open this up. All right, so I'm on the Roofstock main page right now, and as I mentioned, Roofstock is more than just a buying platform. There's also services for ownership as well as for sellers, but we're going to focus today on the buying side. So going into this main buy area, we see our property list view, and this is where we can see the current listings that are available for sale. We're adding new listings all the time. So it's a part of the fun thing of monitoring the website is seeing new listings come in that hit your buy box. So, all right, so within Roofstock, we have these filters that are really helpful. And within these filters, you can set up alerts. Some of the filters, we have some preset ones with minimal repair, some multifamily filters, high yield, turnkey, 1% rule. And you can also set filters on list price. I talked before about that neighborhood rating. Perhaps you only want to invest in neighborhoods that are above a 2.5. You can apply these filters right here. Just a quick way to limit down, because sometimes looking at properties, it can be a little bit blinding and you're seeing so many properties at you. It's like, where do I start? So these filters are really a great resource to start being not subjective. Yeah, I think I said that right. Being data driven about narrowing down your buy box. You can filter by market. And then within this more section, we have a variety of additional filters that you can do based on occupancy. So some of the properties listed on Roofstock are already occupied and cash flowing. Some of them are vacant and rent ready. I personally, that's just something we talk about sometimes on Roofstock Academy, is people are say, oh, I want to buy only an occupied property because it's cash flowing day one. And my response to that is, ultimately, like in investment properties, it's going to go through cycles of being occupied and vacant, and you should focus on the deal, not necessarily the occupancy right now. But if you wanted to buy a property that was currently occupied right now, you could filter to that. We have gross yield, cap rate, some of these other filters. A filter that I like a lot is this discount to valuation. So I can filter to only include properties where the valuation is higher than the valuation is significantly higher than what the list price is. So they click include this here. I'm only going to see those properties only. There we go. All right, so this is just it limits it down to those particular properties. All right, so some other functions within this list that we have. I can see it as this card view, or I can filter it into a list type view. Within this, I can sort by gross yield or some of these other factors. I could also see this on a map. So a tool that I like to use is to, let's say I want to buy in a specific market, say I'm buying in Alabama, I can filter this into a map view. So I can, if I'm looking to buy in Birmingham, I can get pretty targeted of seeing where these properties are next to in relation to major, major jobs or whatnot, or big downtown area. But anyways, okay, so this is the global list view. We also sell portfolios. I'm not going to go too deep into that, but I will show within this buy, I can click right here to portfolios. If I'm looking to spend a little bit more money, and there's a saying it's like going to Costco versus Safeway or Vons or wherever your local grocery is, you can get a little bit of a discount doing more bulk transactions. But we'll go back and focus on the individual properties. But its portfolios are fun to look at. So I found a property here that's a duplex that we'll go ahead and start combing through the individual property listing. So right now this property is in open house, is what Rusik calls it. That means the property was just listed on the website. And what that means is the property is available to take bids, either above or over what above or below what the listing price is. And after 48 hours, the property switches to having a buy it now option. So you can still submit a bid what is under the list price, or you can just click buy it now and make it more like an Amazon experience versus an eBay experience. So let's take a look into the financial. It all starts and ends within the financials. So I have, by default, it sets it to the list price that the seller has selected. I can see there is if I want to change that, I can either change that in here, or I can adjust these toggles, and this is all going to modify all the financials that we'll take a look at. By default, it sets it to a down payment of 100%. What's so incredible with investing with the self-directed IRA is you can use debt, which is amazing. So let's go ahead and assume that I'm going to use debt. I'm going to use a 70% loan to value, and this is going to update all my financials here, so I can see updated cash flow on how that debt's going to affect it. So big ones, annualized return. That's taking into the assumption that you're going to sell the property with a certain appreciation. For me, I'm looking to buy and hold long-term, so I'm less concerned about the kind of immediate appreciation. That's a little bit looking into a crystal ball. Gross yield, all that. If I want to modify some of these assumptions, I can click into custom, and I can modify what the rent is, what the vacancy, and these are all some default values that Rusik has just from being in the industry and having feedback loops with local property managers on what these values should be. So we have vacancy, we have a variety of expenses that we can see, big ones being property taxes, property management fees, leasing fees. If I'm buying a property that is currently occupied, you can modify this leasing fee to be, I believe this property is occupied, to be 0, and you can see how that reflects how that updates your financials here. So really institutional level tools as it comes to modifying and evaluating these financials. Some other cool things about these financials is many of these are coming from our actual values. And when I say that, I mean like the insurance. So Rusik has an insurance partner that has committed to binding on the dollar amount that is in here. So part of the certification process that I didn't mention is we'll go out and talk to an insurance broker and say, hey, here's this property, it's occupied, it's an investment property, what will you insure it for? And they'll give us a value and we'll put it right in here. So when you're looking at the financials, it's getting as close as possible to what the actuals will be. So we do that with insurance, we do that with property taxes, but property taxes are a little tricky in that they can be a moving target and that they're changing, and depending on what state it is, that changes on how property taxes are calculated. So we come up with our best guess of what the property taxes are going to be, as well as all of these other cost estimates, and we put them here for free on the front end. So let's go ahead and keep walking through this listing. Within this particular example, we have a 3D model of the property, which is pretty cool. We use some technology called Inside Maps to do a capture on the property that comes up with a blueprint of the property. Not all properties have this. We're kind of lucky this one does. It's just kind of a cool feature that some properties have. And there's also you can see the curb view. This is something that I like to do, is basically do a walk around the neighborhood and put my tenant hat on and ask myself, oh, is this a place that I would want to live in? The golden rule is always a great way to go about evaluating properties. Is this something you would want to be living in? So yeah, very nice looking neighborhood here. A lot of like-kind duplexes. All right, so let's go ahead and continue looking through this property. So I was right, this property is occupied. It has the lease start and the end date. This is a duplex, no HOA on this property. We can see the neighborhood as in that score I was talking about earlier that Rusik generates based on all the data it collects on this area. And then we can see some high-level financial highlights. Continuing through this this page, I'm going to take a look at the financials now, and I can see some additional metrics here, and I can break down monthly cash flow with those financials that we were looking at earlier. Let's see, cash on cash is such an important metric. I love this. This is looking at, of your dollars that you're putting in, like what you're coming back. I think it makes it apples to apples when you're thinking about, if I can invest this money in this house, or I can invest it in the stock market. Like I love cash on cash as a metric. All right, so I'm going to jump into this next one for analysis. So we can see our property value here. This is Rusik as a team of appraisers that are coming up with appraised value estimates on the property, providing a range, and then the rent value. And then we have the Diligence Vault, which is that section I was talking about a little bit earlier. And let's take a look at within the Diligence Vault of this particular property. Do a quick buzz by. So within the Diligence Vault, I can see the inspection report that was collected. And it's a pretty thorough document where we have photos, indications of if there's potential repairs, when it was taken, who did it, what the estimated immediate repair cost is, and then a breakdown of each of these different properties. And this inspection report is really focusing on the safety and habitability of the core house functions. This is not going to get so much in things like, oh, the paint needs to be redone or the carpet needs to be cleaned. This is more functional safety and habitability. The other documents within this Diligence Vault is this supplement to the inspection report, which actually breaks down the cost estimates that what it sees. And this is using a software called Exact PRM, which is used by insurance companies. It's a third-party software. And these inspectors are third-party inspectors as well, not Rusik employees or working for the seller. So we can see here all at a line item, all of these different items. And there's a lot of documents here because this is a duplex. There's a lot of inspection reports because this is a duplex, so it's going to have a little bit more. We also can see a history of the ledger. We can see payment history. We redact information that is specific to the tenant for the privacy of the tenant. And we have all this information up front. The last thing I'll show in the Diligence Vault here is the property valuation. And all you need to do to get access to see this information is create a Rusik account, which is for free, and you have full access to these Diligence Vault. And within this valuation, we can see the individual sales comps that the appraiser has selected at Rusik and when it was sold. And so this is the same information that an appraiser would be looking at when they're actually, if you're getting debt on the property, when they're evaluating that. I guess I'll show real quick also the title report that we have. So we run a preliminary title report on the property, but I would say you don't really need to be too concerned about looking at the preliminary title report. The property is not going to be able to transact if there are issues with title. That's why, when acquiring a property, you include title insurance, and that's just naturally done through the transaction process, especially if you're getting a loan. Excellent. And based on that diligence that was collected, we list a couple of highlights here. If you don't want to go into deep dive into the specific property, you can see that all here. All right. What else do we want to touch on this? So I talked about the ecosystem and Rusik, building putting in the infrastructure, basically wearing in a path to make this easy. So what we do within this buy section is we list a couple of our preferred lenders that we have, as well as property managers, and these are property managers that we have vetted. When we open up a new market, what we'll do is we'll identify the top 10 or 20 local property managers. Of those, we'll do a phone screening of the best ones of those. We'll actually go into the office and get a sample of their lease agreements, talk about their standard operating procedures, just vet them pretty thoroughly so that we can feel good about recommending them to our customers that come on the website. But we can see that with lenders here, property managers, as well as the insurance carriers, which we talked about before. Excellent. And then, yeah, similar listings if we wanted to see some properties that were similar. This is the main overview that I wanted to go through on looking at individual properties. I guess the one little final things I'll show is we talked a little bit about Rusik Academy and some of the benefits. One of the cool things, oh look, how about that, is you can actually export the listings into Excel. I know I personally love looking at these properties. I like the listings a lot and it's fun, but a good way to look at like a ton of properties at once is to export these to Excel. And this is a function that's only available for right now for the Rusik Academy members that we have. Yes, so that was my planned presentation and demo of walking through Roofstock as a website. Let's see, Clay, would love to open it up to any questions that we have.
Yeah, why don't we go ahead and do that? And if you do need, I'll put our contact information up there so that folks can see this and get in touch with us. But first question, is Roofstock involved with multi-unit properties or just single family?
We do small multi, so we have up to a fourplex is really our sweet spot. I'd say the majority of our listings are single family, but we do have duplex, triplex, and fourplex. That's a big thing we're adding in 2020 is continuing to add more of small multifamily. So if you're looking for apartment complexes, not the best site. LoopNet's a fun one that I sometimes will look at, but mainly, yeah, small multifamily and then single family.
Got it. And if you'll just recap, I know that you touched on this a little bit, but the decision process of which properties get added to the Roofstock site.
Yes. Yeah, so we have, as I mentioned, we have a certification process where sellers, well, the first thing that in that process, a seller will give us a listing and we'll just look at what they are thinking about for the list price. And if it's the rent ratio makes sense as an investment, that will be the initial barriers. So if someone comes to us with a $2 million single family house that only rents for $5,000, which is a lot, but that ratio is not good, we'll use that as a barrier. So we have some return requirements. And then once the property actually gets in to certification where we're doing our diligence, this is before it's listed, there's several ways that we'll kick properties out. One is if there are some safety or habitability issues, be it the foundation, be it with dangerous types of mold, structural issues, that will get vetted out. And then if there's some major tenant issues, perhaps a history of not secured funds when they're trying to pay rent, or issues of vacancies, whatnot, or excuse me, issues of evictions, that's another criteria that we'll use to kick properties out and say, this isn't the best platform for you to sell. Gotcha.
So Tom, when somebody selects a property and they're looking on the website, this seems so novel. And I think your analogy of other sites that use kind of purchase procedures, what happens if I click select buy this property? What happens?
Yeah, so what happens there is if you click buy it now, it's like it's yours. The transaction has begun. If you're bidding, the seller will get notified, oh, you received a bid, and you guys can negotiate back and forth. But what happens when we have an agreed upon price, a transaction coordinator from Roofstock will reach out to you, and this will be your point of contact, who would be working with your lender, who would be working with the seller, who would be working with the seller's property management, who would be working with your new property management. And the transaction coordinator will walk you through the process, which I'm kind of doing right now, is go through the major milestones. So first, we're going to sign the purchase sale agreement. Then you're going to submit an earnest money deposit, which is basically, I think it's $1,500. Don't quote me, where you're sending it to this escrow account, basically showing like, yeah, I'm in this transaction to close. And that transaction period is usually between 15 and 35 days. Additional steps that come up in the transaction is if you are getting a loan and the lender requires an appraisal, your transaction coordinator will run with that. You just give the contact information and your TC will run with the seller and the appraiser. If the property has an inspection contingency on it, and what I mean by that is properties that recently had an inspection done may not have an inspection contingency within the transaction, just because we just did an inspection and we want the, a huge part of what we're trying to do is make transaction close quickly, like liquidity to the market. But if an inspection wasn't completed in certification, perhaps the inspection got old, or for whatever reason, there would be an inspection during the transaction where you as the buyer would have the opportunity to cancel the transaction based on the inspection reports results. So that's another thing that could happen. There could be an inspection contingency. And then final closing. Most of our closings require a notary to come out and have you sign on the dotted line the final closing papers. And this is another thing the transaction coordinator will help you with. And they're there to hold your hand through this whole process. But once you click that buy now or come to an agreement, it's really the TC kind of holding your hand, walking you down the path of what needs to happen to close.
Okay.
Yeah.
Got it. There's a question here about one of the cap rate formula. So, and I know that you mentioned that even in some cases the property taxes are, it's not you don't have the exact number necessarily, but the question is, are taxes and insurance added to the cap rate formula? If you know
they
that.
are. Yes,
yeah.
They are, and they should be. That's going to go into your net operating income, which is a key aspect of that. What's not included in the cap rate is any debt servicing. So if you are getting a mortgage, that's not going to be included. And the reason that it's not is it makes investments apples to apples. So I'm evaluating one property from one investor to another. They may have different terms on debt and how that's structured. So it does include taxes and insurance, but it does not include any debt servicing if you are electing to go that path.
Got it. And then, so this is an interesting question too. It's a perspective that I'm sure a lot of us have. Is so, and I've had some experience with it myself. So I'm curious as to your thoughts on when you buy a property remotely. So you find a property you think will work for you. How do you manage it remotely? What does that look like? What what are the actual steps for that?
Yeah. So a huge part of real estate investing that is a lure to me is passive income. And that's why I lean pretty heavily on third-party property managers. And honestly, if you could have one takeaway for remote investing today, it would be don't wait to start talking to property managers to find the right one that you like, to getting comfortable with them. I think you can use them on the upfront acquisition side. Like I'll give them addresses that I'm thinking about buying, and oftentimes they'll be honest. So I digress. So back to your question about, how do you think about management with these is identify a property manager that you trust. Rusik gives you a great head start where we offer multiple recommendations within each market. But then ultimately they kind of run the show. They'll during the transaction, they'll get all the information that they need. They'll do the introduction to the tenant. I've never talked to my tenants. It's all the local property manager. I want to be focused more on the acquisition side and thinking about crafting my portfolio. But then you'll have this relationship with the property management where they'll collect your rent for you. They'll automatically send you the check into your IRA account or your personal account or whatever. And then there are events that you need to be involved, they'll bring you in. So say there's a repairs and maintenance issue and they give you multiple bids from multiple contractors to fix it. You get to pick which bid you want. Or say the property becomes vacant and then you get a tenant application. A good property manager will have you have the final say of saying yes or no. Now, most of the time, I'll just say, I'll defer to you. You're a professional in the area. I trust you. We've been working for a while. but a lot of them will give you that option. So it is very hands off. There's times where you might be a little bit more busy, like I said, where there's a repairs and maintenance and they'll ask you for feedback. But ultimately, the ownership of it is pretty straightforward with your property manager. And the way that they get paid is they collect anywhere between 6% and 12% of the rent that they collect, as well as typically some sort of premium for when they lease the property and when they're managing repairs and maintenance. And that's just I feel I have no problem, with them making that money. It's good work, and they're, monitoring the property, keeping it safe and habitable for the tenants, and it's a good way to spend money.
Got it. There's a question here about loan to value on IRAs, and I because you and I have done these a couple of times, I think I'll just field this one. So
yep.
They were talking about the 70% loan to value if it's an IRA taking out the loan, and I will just say this, that it's a non-recourse loan, right? The IRA holder cannot encumber their own personal assets in service of the loan in terms of collateral, and so it's lender specific. So it's not impossible that a lender would give you the 70% loan to value, but it's uncommon. I'll just say that, at least in my experience, because the IRA has taken out a loan and the only collateral is usually the property. Usually the lender will ask for 35, 40% down, sometimes a little bit more than that, but somewhere in that range. And the reason is just because if the IRA defaults, their only way to make themselves whole is to take the property. So 70% from an IRA perspective might be a little aggressive. From a personal perspective, might not be, but it's lender specific. So unless you have something to add on that one, Tom, I'll go on.
No, yeah, it's perfect.
Okay. This question says, can I use the site as a buyer and seller without going through the academy? Are those two things linked?
Definitely. I like to talk about the academy just because that's my deal, but you definitely do not need to use the academy. It's an additional resource, and we have other free resources with roof talks and stuff, but no, definitely not required.
Okay. It looks like the site is devoted mostly to retail listings. Can I list off-market properties from around the country, and if so, how would it work as a seller?
Yeah, great question. If you want to, so we have like quite a bit of seller support and other resources. This presentation was definitely focused more on the buyer side. We also do quite a bit of larger institution related business with buying and selling. One of the co-founders who runs this other side of the business is like an investment banker who facilitates trades between big public REITs. And these are like, trading like 1,000 properties at a time. But please reach out to me and I can get you in contact with our seller services team, who can go deep dive on the selling aspect.
Okay. There's a question here about the presentation. Will it be emailed? So it is being recorded, and you will get an email that has a link to the recording. So yes, absolutely, you can review this after the fact. Next question is, do these properties need rehab? If so, how's that handled?
No, most of them are any major safety and habitability stuff is not going to pass the certification process. This is interesting, the concept of properties that are a little bit more scratch and dent. Most of our investors have been looking for more, I wouldn't say like totally turnkey, but not not needing a contractor. There's just an extra layer of complications, when you need some major issues. So if there were issues that do come up, as they do with repairs and maintenance, you and your local property manager would work through that. Or if you wanted to self-manage, you could. So yeah, most of the properties are in good shape. I think in the future we may start adding some more properties that are a little more scratch and dent and need more rehab, but right now it's focused more on stuff that's a little more stable.
Gotcha. Next question is there a monthly fee for roof stock or a one-time payment? That's the question.
Yeah, no monthly fee. So the way that roof stock makes money is on the transaction. So we make, when you buy a property, you pay 0.5% or $500, whichever is greater. And then the seller pays 2.5%. So roof stock's business model is as the broker to make money on the transaction. So for you to sign up and to look at properties and do whatever, you don't need to pay anything.
So, gotcha. Okay. I had a question about it essentially is asking, do you aggregate information about cities or states or regions that the investor can look at? Is there any aggregated data?
Yeah. So this is there are market pages where we have some information, but it's not. Let me take a step backwards. There is some information. We subscribe to John Burns, who's an economist in the space, and this is another perk of the Rusik Academy, where we share through some of where he goes pretty deep on each of the different markets. I think like the top 50 submarkets. I'd say though, aggregating data just like on the regular website, it's not that dynamic. Individual metrics related to an asset like the neighborhood score, that's updating pretty regularly as we're getting new data. But just looking at like a broader aggregate on the market, there's really good stuff within Rusik Academy, but on the like general marketplace page, I'd say it's pretty static in that it's not updating a ton, at least right now.
Got it. Next one is about non-recourse lenders, and so it's asking, do we have lists of other ones? And I'll just say, yes, there are lists. I have one I'm happy to give to you. And it's not that we recommend them. And I will also just give the caveat that, the coronavirus situation, some lenders have changed some of the things that they do, some of the products that they offer and things like that, just in the last several weeks and things like that. So it may not be as on the mark as it has been in the past, but if you would like a list of the ones that we know of, and again, we don't vet them or anything like that. We really just, if they offer that product, we're happy to give you a list of their names so that you can go out and analyze them yourself. But you're right that not everybody does non-recourse loans, so getting a starting place is a help for sure. Is a renter profile available for a seller before purchase?
To protect the privacy of the renter, we show a redacted ledger, but that's we're not going to show the lease or the applicant their application when you're just looking at a property. When you're in a transaction, can get a little bit more. But I mean, what's really important to me is the payment history, and that's what we have. So you can see, if they've been in the house for 6 months, a year, a month, or whatever, you can see that actually month by month flow, which is really ultimately what we're about. Gotcha.
And there's a question here: can I use personal finances outside of my IRA or in conjunction with my IRA? The IRS, generally speaking, will say that there's not supposed to be any commingling of funds. So if your IRA buys the property and is on title, there's very little option for you to use your personal money there at all. So I would say no. There are some partnership scenarios where your personal funds and your IRA funds, there is a possibility for that partnership. So I don't want to give you just a one-note answer, but I also don't want to go too far into the weeds. So if you give me a call or send me an email, I'm happy to get in more detail about whatever scenario you have in mind. But generally speaking, when your IRA's funds are involved, your personal funds are not allowed to kind of participate in the deal. And I guess this is the last one. So I see that some are trickling in. So if you have some, type them real fast now, and we'll try to answer them on the air. If we don't answer them on the broadcast, I'm happy to answer those after the fact via email. So please do type them in anyway. Any questions that you might have, we're happy to get you answers to those things, both Tom and myself. So, and then, so the last question we'll kind of end up with is just, are there particular data resources that Rusik uses for their data?
Yeah, so we actually just went through a round of funding pretty recently, and one of them was one of the biggest title companies in the country. And so we get an ocean of data from them that goes in the way that we think about submarkets and neighborhoods. And so Atom Data is another data provider that we buy data from. But I mean, really, honestly, that's just a big part of our value add is these is the data that goes into some of these metrics, such as the neighborhood score. And So yeah, those are a couple of resources that we have where we get data from.
Yeah, I think the question was more about the broad data, but it sounds like you guys also use pretty localized stuff as well. Is that accurate?
Yeah, yeah.
Okay, great. All right. Well, listen, hey, Tom, thanks a lot. I really appreciate it. I know it's a little early there on the West Coast, so thanks for.
No. Yeah, no, thank you so much. And thanks for everybody for jumping on and joining us this Thursday
Yeah.
or afternoon or whatever time it is, wherever you're at.
Yeah, thank you everybody for joining us again. The broadcast was recorded. We'll send you out a link to the recording, and wherever you are, hope you be safe and happy investing. We'll see you on the next one.
Thanks, Clay. Thanks, guys.
All right, see ya.